It's pretty mixed right now. What's not doing well, you have the Hong Kong market down 0.7%, so 140 points gone there.
17,863. That's not very far away, but 120, 130 points away. But that's the level to take out.
At some point of time, you'll get a bit of a dip. You need to participate going by the data points. So buy on dips is likely to continue.
Promeet Ghosh will be taking over as MD and CEO as Mr. Matthew Job has resigned from his post.
Financials linked to vaccines. Now that has been replaced by a straight equity, investment.
So there you have it. The first take on the index. The Sensex is up about 40 points. The Nifty is up about 17 odd points.
Time correction for last 1.5 years. The valuation risk is probably a lot lesser in the current market conditions.
You've seen the recent ad of Zomato as well. You'll see that users can go ahead and book tables in restaurants via the dining tab on the app.
In comparison to our poll, I think it's a little bit lower. That's the margin. But the absolute revenue is much better. The absolute EBITDA number as well is much better.
The $300 million at the moment is a large investment, that one of the largest investments we've made in a strategic alliance.
Range bound between levels of 17,716 to 17,792 on the upside.
Well, that was the day so far. We are coming to you live from the CNBC TV 18 Motorola Oswal studios, and you're with us here on a new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios. Nigel is joining us, as always, from the newsroom floor. Guys, hi, good afternoon. Today is a day where there is this impulse to buy the dip, but more than the index, it is making all the moves, and there are at least 3 or 4 almost near double-digit moves that we are seeing. There is IPCA, there is Crompton, there is Zomato, which is seeing a big move. So there is it's buoyant. Some dip buying keeps coming back in, although it's not a decisive move. We're at about almost 17,800. The previous high is about 60 points away. The Bank Nifty has already taken out its previous high, and for that, that index, the level to take out is 42,966. Again, for an index at 43,000 is not very much. Being broad market-based top-down is going to be single stock bottom-up. Rima, hi. Surabhi, hi.
Hi, Prashant and Nigel. Actually, the Nifty just took out 17,800 about a few minutes back in the last 30 minutes. Banks continue to power ahead. That's providing leadership. The Nifty Bank has rallied this week, 5.5% so far this month. PSU banks have been outperforming, with the PSU banking index is down nearly 1/3 of a percentage point. The Dow Futures is currently lower by 140 points. We heard from UBS how their profits have fallen by more than 50%, so that's weighing on Europe. Prashant earlier spoke about, and we're just about 60 points away from that level. But all in all, the momentum on the way up seems to be very much intact still for the second day in a row.
Oh, yes, absolutely. And Prashant, I'll tell you what, words like momentum, movement, upside thrust, for we got 30, 35 points, 40 points on the Nifty, because there were days where we had 0.00%.
I think yesterday was the first day.
Yesterday was the first day we saw a move. Yeah, we couldn't believe it actually. So today we're getting a bit of a follow-up. HDFC AMC's numbers are coming in. Is the only group on the Nifty that's trending lower. This is, of course, reacting to numbers. HDFC Life, which is reporting tomorrow, HDFC Bank and HDFC itself. Those are the 3 big stocks that are down on the Nifty. Talk about Reliance, because what's happened is that it's that big move on that large cap stock that's helped things in the last half hour to 1 hour. That's the HDFC group. That's the downside. Now let's talk about the upside, RIL, that we're witnessing right now. That clubbed with the fact that anyway financials have been very strong today. You leave out the HDFC group, but everything else on the financial screen has looked good. Bajaj Finance and ahead of the numbers. Tomorrow they report that those are the 2 stocks that are up and about. IndusInd Bank, again, the market has decided to read the glass as half full and not half empty, looking away from that rise in slippages towards a very smart all-time high NIMs, growth numbers, loan growth, etc. So Financials are doing well. Bharti Airtel and Reliance have joined the party, and the Nifty is feeling rather good. Nigel.
Well, you know, in that run-up to the show, we had a bit of a snippet that played out. And earlier today, I said, going by the data points, you know, if you get a bit of a dip, you have to buy it. And buy the dip has played out because of the strong data that we got yesterday. Today, actually, the Asian markets were quite subdued. And in the first hour of trade itself, the Nifty was down 30-40 points from the day's high. If you bought that dip, you'll be quite happy because, you know, that was really what the screen was telling you. It is that sort of a day. Now, the mid-cap index will tell you, hey, the mid-cap index is underperforming today. But just take a look at the number of stocks that are advancing in comparison to the number of stocks that are declining. And you have way more winners than losers. So there are select stocks, as you all have been mentioning, that are doing quite well. But since we're tracking the index, let's focus on a couple of options data. 17,800 put for the second day running. It's seeing massive open interest build up. So clearly the bulls, they believe, you know, from that 17,550 to around 17,650, they believe this base of the market in the near term. We have expiry that plays out in the next couple of days. So they believe the base is trying to be moved higher. But today, the financial Nifty services, that's the one that has its expiry playing out. And if we look at the 19,000 put, it's extremely active in today's trading session. Big surge is what we're seeing in terms of open interest. And going by the data points out there, the support zone will be around 18,900 to around 18,950. Last 55 minutes, as we mentioned earlier today, the swing factor will come in from the Nifty Financial Services. The Nifty Bank is doing quite well. Can we end on a high? That's what will give the bulls a lot of ammunition because the shorts getting into an expiry day will be forced to cover out. But it's a good session and buying the dip really is playing out in today's session. We're 75 points off the day's low.
Okay, most of the banks actually are doing pretty well. So ICICI Bank, IndusInd Bank also higher. The only ones which are flat today are the HDFC Bank and the entire group. And that's because they rallied quite hard yesterday. So how should you position yourself in the last hour of trade? Mitesh Thakkar is now with us with some closing strategies. Mitesh, you've been advocating a buy on dips approach, maintain a bullish bias. Thoughts so far with the Nifty at 17,800?
So I think, you know, 17,825 is one target on the upside, which I'm looking at, and we got higher from 17,808. So I would suggest take some profits off, not all. I think, you know, maybe 1/3 positions can be dropped and wait for any kind of dip to re-enter. In case we start getting past 17,825, 830, then I think it will be much easier to just trail your stop loss in the balance position to about 17,770 and then hold on to long positions. So I think that's the way we'll approach it. The broad bias is on the upside, but given the fact that we rallied from 17,550, which was made on Friday, to about today at about 17,800 and hitting the previous hourly high, good chance that there could be some profit booking happening. So it's always, you know, just managing to look at your probabilities and trying to balance your position accordingly. Having said that, the stocks that are on my buy list are IGL and Lalpath Labs. I've picked up mid-caps purely because, again, on the index, there is a chance of profit booking. So IGL is a buy with a stop at about levels of 487 for targets of 511. And Lalpath Labs is a buy as well. Here I would recommend buying with a stop just below levels of 1915 and look at targets of roughly around 1980 to 85 on the upside.
There are two stocks which have hit a fresh 52-week high today. One is ITC and the other one is Bajaj Auto. Both of them are at fresh 52-week highs, and these are stocks which are traditionally not expensive in the entire sectoral basket to begin with. So in the rotation trade that's taken place as the markets are consolidating, some of these stocks which weren't expensive compared to peers have actually seen a lot of buying interest. But the stock on our radar, and quite the stock of the day, is Crompton, sliding after a leadership change at the company. Surbi is here with the details. Surbi.
Thanks so much for that. So Crompton is clearly the stock of the day. The company has announced the realignment in their top management. They have announced that Promeet Ghosh will be taking over as the new MD and CEO, as Matthew Job will resign from his position as CEO and Executive Director. They've also announced that Mr. Shantanu Ghoshla, who was previously the MD, will now be appointed as the Executive Vice Chairman for 1 year. Thereafter, he will serve as a non-executive Vice Chairman till December of 2025. Now, Promeet has been a deputy head at Temasek India for almost 10 years. He has served as a non-executive director on Crompton's board for 6 years and on Schneider Electric's board for almost 2 years. But the street is worried that he does not have enough experience to run the company, as he has largely been an investment banker, though the association with the company is a mild positive. Now let's look at the Crompton's performance over the last 5 years. In the last 5 years since the demerger, the company's performance has been pretty decent. On a compounded annual growth rate basis, it's seen a revenue growth of 7% and a PAT growth of 5%. But it's the sector-leading ROE of 35% that has impressed the investors. When you look at the shareholding pattern between 2016 and now, in 2016, 34% of it was held by Temasek and Advent. But they have exited from the company since then. And as per the latest disclosures, 85% is split between FIIs and DIIs. So the concerns about who is going to run the company continues. To sum up, the lack of operational experience from the incoming CEO, multiple leadership changes in the past with the CFO exiting in May 2022, and also where the strategic priorities of the company lie with their recent integration with the Butterfly, all continue to weigh down the stock. But it's still pretty inexpensive when you compare it to their peers' valuation. Crompton is trading at around 22 times FY24 PE, whereas Havells is trading at 55 times FY24 PE.
Yes, having one of the lowest valuations, the stock has been on a singular decline, really. Hasn't done much since September of 21. It's pretty much been almost a one-way down story, losing almost 30% in the last 1 year itself. Deepan Mehta, director at Elixir Equities, is joining in. Deepan, good to have you on the show as always. I'm not sure if you track Crompton, but any thoughts? I mean, this is a pretty severe market reaction to a management change. It's a straight-out no, so to speak, from the market. Would you look at a contrarian view here at all? But then, as I mentioned, I mean, Crompton, for whatever reasons, has really not enthused the street in the last year and a half.
Good afternoon, Sudhi, and thank you for having me on your show. But I think what we are not factoring in over here is a very, very, very hot summer. And that's going to be very positive for Crompton, which is amongst the market leader when it comes to fans. And overall, I think the set of sentiment got a bit nervous on the acquisition of Butterfly Gandhidham, which was a major acquisition. But once they're able to assimilate, I think it does improve the product profile. And look at the way real estate sales are zooming. Certainly, I think new home sales are going to drive all the product categories for Crompton. And such corrections, I think, are good opportunities. It remains a very strong company, very good brand, and market leader in most of the categories it operates in. So I'm not that negative on the stock. And such corrections may provide a little bit of margin of safety, given that this stock has traded at higher P multiples in the past.
Okay, all right. Noted that, Deepan. Well, by the way, just to point out a couple of stocks, NCC is moving to the high point of the day. That's really been defying gravity for the last many sessions. That's at around 120 rupees. It's really unfazed by any kind of weakness that we've seen in markets periodically. In fact, year to date, it's up 40%. That's the big outperforming stock actually from the broader markets. And another one that's coming on my radar is Relicare. Take a look at the price volume action out there. The stock is up and about in today's trading session. Big move is what we're seeing on Relicare. But let's focus on the pharma space. Ipca, well, that stock is under some pressure after they got into agreement to acquire 30% stake in Unichem. That's a sizable acquisition. Ekta joins us to run us through why the street is disappointed with this acquisition for Ipca Laboratories. Ekta.
Thanks for that. Well, first the news. Ipca Labs is going to be buying 33.38% stake in Unichem from the promoter at 440 rupees per share. So the total comes to around 1,034 crores. There will also be an open offer for an additional 26%, which would be a total of around 805 odd crores. The purchase price for Unichem was at 440, which was a 13% premium to yesterday's closing. Now, what exactly does Unichem bring to the table when you talk about this particular acquisition for Ipca? Remember, Unichem had sold their domestic business in 2017 to Torrent for 3,600 crores. Now, they only had their international formulation business, which remained with them. And out of that, 55% is to the US in terms of supplies. They have 3 formulation plus 3 API facilities. All of the plants which do supply to the US do not have any regulatory issues. They are compliant. And hence, Ipca, which has had 3 facilities which have been under the US FDA scanner since 2015, will get access to the US markets. A couple of negatives: the Unichem business is only growing at low single digits over the last 4 to 5 years. The margin profile has been weak. 9-month FY23, they did record an EBITDA loss. Hence, it could be margin dilutive for Ipca Labs. Also, Niche Generics, which is an arm, is expected to have a pending fine from the European Commission. Valuations, annualizing 9-month numbers, acquisition is done at an enterprise value of around 2.5 times revenue. And the likes of Incred, the brokerage, indicate that the company is paying a high valuation for a loss-making asset, hence is an expensive buy. Also, a couple of analysts that I spoke to did indicate that, there could have been better utilization of funds, such as rewarding shareholders.
All right, Ekta, thanks very much for that. Market, by the way, has picked up a little bit more in terms of pace when we started. 55 points on the Nifty, by the way. And there are so many other new names, right? I mean, which was not there in the first half of the day. BSE, that is Bombay Stock Exchange, that is up 7%, 490. There was, I think, an article a few days back saying that the NSE IPO is again going to be, nowhere near. It's going to perhaps get delayed. There is the railway stocks and the Adani stocks that we've been talking about, but newer names, right? So look at something like a Voltamp, which is up about 5.5%. That's a big mover right now. Not a small, but a troubled construction company, trouble in the past. BL Kashyap, that is up about 7.5%. Nigel was just talking about NCC. BL Kashyap is a pure contractor. Texmo Pipes is seeing a big move. It's a 20% move. It's limit up. Last Tuesday, the price was 48 rupees. It's at 65 right now. Max Ventures is another one, which is up 5%. The stock is back at 200, which was the high which was made towards the end of last year. Then it corrected all the way to about 120, and it's back to almost 200 levels once again. Deepan, afternoon. Out of the names that I mentioned, anything strike a chord, or you want to tackle Ipca, Unichem, which Ekta outlined?
Yeah, Prashant, good afternoon. I think this move by Ipca is certainly not well received by the market. The value of pharmaceutical business now is more on the domestic market. And of course, Unichem sold off the best of the business to Torrent. And Torrent, that business has done really well for Torrent. So trying to buy just for sake of getting exports into US is something that doesn't make complete strategic sense. But then I think Ipca has got constrained because of its regulatory track record and all the US FDA-related issues. And maybe they have an ace up their sleeve by getting the actual formulations manufacturing and the bulk manufacturing facility, and maybe have some of their products suited to that once appropriate approvals are in place. But on the whole, on the face of it, companies which are going more for global business are not preferred by the market. It's more about domestic-led stories over there. And I think we have a fabulous issue coming up, Mankind Pharma, which is one company which is almost 97% focused on the domestic market. I think that will interest many investors, professionals, as well as the retail, because the dynamics of operating in the domestic market are very different. And if you have a good, strong brand and distribution network and feet on the street in terms of medical representatives, then that's a good secular growth business as compared to exporting to US generics or any of the other geographies, which is fraught with a lot of risk and volatility in earnings.
Another stock doing well is Mahindra Holidays. Reported their numbers and the stock has spiked nearly 4% post the numbers. Revenue growth of 31%. Margins have expanded from 16.2% to 23.2%. So that's an over 700 basis points expansion in margins. And the profits too have seen quite the jump, 56 crore versus about 16 crore. Q4 is typically a seasonally strong quarter. Occupancies, last time we chatted with the management, were high, trending above 85%. The European business was also turning around. So Mahindra Holidays had a lot of things firing for themselves. And of course, the fact that there is so much pent-up demand in terms of travels and holiday, strong numbers from Mahindra Holidays. But let's move on then to the automotive pack. CNBC TV18 has been reporting on how the FAME subsidies have stopped for two electric vehicles like Hero as well as Okinawa for nearly 15 months now. A total of 13 EV players have had their FAME subsidies suspended due to allegations of misappropriation of subsidies. We learn now that these companies are facing a strong working capital crunch and are in talks with investors to dilute their stake and raise money. Parikshit joins in with more details on this. Parikshit?
Yes, we learned from industry sources that 13 to 14 EV companies which are under investigation by the Ministry of Heavy Industries for misappropriating FAME subsidies are considering selling a minority stake. CNBC TV18 has found out that the manufacturing operations and working capital requirements of these EV players who have had their subsidies suspended are in talks with investors and some of the leading OEMs in India. Some are even considering selling a majority stake. The reason for this, according to them, is that subsidies to the tune of 1,400 to 1,500 crores have been on hold and have accumulated over 15 months. This withholding of subsidies, due to the probe into misappropriation, has impacted the creditworthiness of the companies, and companies affected say that banks are not keen to extend working capital loans either. Sources have told CNBC TV18 that Okinawa is among the companies considering a dilution of stake. When we reached out to the management, they said they are not looking at divesting a majority stake, but are in talks with investors to support expansion plans. At the same time, Okinawa and other affected EV companies are in talks with the government to find a solution. The Society for Manufacturers of Electric Vehicles has said there should be rationality and practicality in government's decision-making. They say the government should allow the companies to have a fresh start and understand that in 2019, there was no supply chain for electric vehicles in India and companies were forced to import whatever was not being manufactured in India. But net, all the companies which have been impacted by this probe are looking for options, looking for investors, are in talks with OEMs in order to get investments to support their working capital requirements.
All right, Parishad got that. Thank you very much for all the details there. So that's the latest on the FAME subsidy front. We do have to take a break on that note with the news that the fight continues around the 17,800 mark. We'll come back on the other side and get some perspective from Dinshaw Irani of Helios Capital. He joins in just a bit.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
कैसे करते हैं ट्रेड? Try 5paisa. Powerful charts and research tool. One-click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा. 5paisa app करो install. Trading made simple, simple for all. With 5paisa's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go. ऐसे करते हैं trade. सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing. I am heat. AC gone.
Blue Star on. Blue Star fast cool inverter AC with voice command. Bye heat. Blue Star.
Mankind Pharma Limited.
As well, I think their growth rates have been phenomenal over the past decades or so. And maybe that will also follow through going ahead. So maybe on listing, if it is available at feasible valuation, we are certainly looking at investing in the company as a disclosure. But it's a good listing, and we get a very good response as well. And I would advise the retail investors to certainly apply for the IPO. I'm pretty certain it will trade at a premium on listing.
Okay, all right. Apply is the call coming in from Dipan on Mankind Pharma. In fact, the management, we joined them earlier today as well, and they sounded reasonably confident. They said the focus continues to remain on the domestic market, and they give us a broad sense in terms of their products. They say that they're market leaders in various segments. But time to move on then. Let's focus on ABB India. I remember earlier today we had the parent, ABB, who released their numbers. Vivek joins us to run us through those numbers. Vivek, they increased their guidance as well at the parent level. But what's the read-through for the Indian business as well?
Well, absolutely right. Like you mentioned, very strong set of numbers from global capital goods major ABB. They went ahead and raised their 2023 guidance, like you mentioned, from a 5% that they had earlier, 5% growth, to almost 10% now is what they are looking at. And very interestingly, what they're saying, the guidance even for the next quarter was very strong. Double-digit comparable revenue growth is what they're seeing for Q2. Remember, they follow a calendar year. Also, revenue growth to be at least 10% is what they are seeing. Now, when you're talking about the India ordering activity, the ordering activity that ABB Global has actually gone ahead and told for India is that there has been an increase of 46% year-on-year growth as far as India ordering activity is concerned. So what we did is that, we actually went ahead and saw the correlation between the ABB parent arm, whenever it declares results, and the corresponding ABB India, what is the kind of revenue growth. So we went back as far as 4 quarters. So Q1 CY22, ABB Global, the Indian growth for the global arm was almost 27%, and for ABB India, it was around 26%. So strong correlation seen over there. For Q2, it was 81% and 64% correspondingly. For Q3, 44% and 38%. However, when you're talking about the previous quarter, that is Q4 CY 2022, a 24% growth in ABB Global. However, just a 4% growth, it was an aberration on the back of the fact that the ordering actually went more to the arm, the global arm. So when you're talking about 46% here, analysts are actually penciling ABB India revenue growth between 15 to 22%. If the correlation sustains, expecting it to be a revenue beat as far as ABB's Q4 is concerned.
All right, that's a nice one, Vivek. That's ABB in focus. Stock is higher, as he highlighted. So we'll wait for the numbers from the local ABB India as well. Ashok Leyland is the other one. It's up about 3%. HSBC has initiated, I think, coverage in the stock with, I think, a slightly cautious note. Sonia has got more. Sonia.
So it's interesting, right? The stock is up 3%, but HSBC has initiated a cautious note on the stock, saying that there is a slowdown that they're witnessing in the commercial vehicle sector, and they prefer Tata Motors to Ashok Leyland because of valuation. So they have a hold with a target price of 145 rupees. They say that the commercial vehicle space is expected to grow just 8% in FY24, and that's a slowdown compared to what we've seen last year. Also for Ashok Leyland, the market share has likely peaked, while they believe that for Tata Motors, the worst of the market share fall is behind them. So it's a classic case of choosing Tata Motors over Ashok Leyland in the commercial vehicle space. They also say that there is very little room for margin expansion from here on, and there is for Tata Motors, not only has the market share bottomed out, but there is a scope for further upside as well. So that's perhaps the reason why they are cautious on Ashok Leyland, because they believe from a valuation and a growth perspective, Tata Motors is a better option. Back to you.
Thanks a lot for that, Sonia. Deepan, what do you say? HSBC says that they are tilting in favor of Tata Motors in comparison to Ashok Leyland. What's your take?
I prefer to go with Ashok Leyland, because when you buy Tata Motors, you're buying Jaguar Land Rover, which is a very difficult company to monitor. And it does surprise on the positive, but then has its share of disappointments as well. And clearly, you want to go for auto companies which are domestic focused, given the situation in the globe and all the economic macro headwinds which a lot of companies are facing. At some point of time, I think Jaguar Land Rover also may get impacted by that. Because on the Indian side, because of improved capex cycle and increased industrial activity, you're going to see very good demand coming in for commercial vehicles. So very positive on Ashok Leyland, and that we would prefer that over Tata Motors.
All right. Nigel Ashley, huh?
Yeah. I mean, that's...
I think Rima and Surabhi want to know who's Ashley.
I think most analysts, they call it Ashley. I mean, so it's just a sense.
If you say so, Nigel. If you say so.
All right, I think let's not pull his leg too much, right?
On national television, yeah.
Navneet,
no, please go ahead, guys. I mean, you could get yourself into trouble.
Okay, all right. So, Ashley, it is 17,782. Deepan, thank you very much for joining us. Good speaking with you on the program today. 38 points higher. 17,781 is where we have the market trading. I mean, it's coming off a little bit, but not too much. Dinshaw Irani is Chief Investment Officer at Helios Capital. He's joining us now to take some questions. Dinshaw, good to have you with us here. Thank you very much for your time. It's kind of been a very strong rally till about a week ago, and then a sideways market for the last week. And yesterday, once again, hopes came back that maybe we're resuming the rally upwards. the all-time high is not very far away, 4-5% of the Nifty, and similar numbers for the Bank Nifty as well. Do you see enough in the mix in terms of impulse triggers for the market to sort of move higher meaningfully from here?
So Prashant, thank you for having me on your show, and very good afternoon to you and your viewers. Now, look, if you look at the year-to-date performance of the market, it's not gone much, right? I mean, it's come off its peak and it's remained there. And in fact, that's what we've been calling out for a while, that probably you'll see the market trading in a very tight band of whatever, 17,500 to 18,000 and stuff, and which is happening, right? And in fact, our feel is that this band will continue probably into this quarter itself. I mean, by June or something, because there's not much of excitement, frankly, happening out here. Even the rally that you saw yesterday was driven by banks. And frankly, I mean, that was because of the numbers brought out by ICICI Bank, blowout numbers, in fact. So that helped in a way. But our call is that the demand itself, domestic demand we're talking about here, is a bit constrained today. So the consumption-driven names and probably some commodity names and all these guys will not be reporting that kind of good numbers. You've already seen the external-facing sector getting pressurized. I mean, IT is a good example. I mean, the results were a washout, in fact, and shocker rather, Infosys in particular. So you've seen that, right? So there'll be a drag on the market. There'll be some pockets where the upsides will be there, like banking and all. Otherwise, we don't see the market getting too excited. And all this call will be obviously when Fed comes out with this further FOMC numbers in May itself. If they contain, I mean, if they do not take any interest rate hikes and RBI continues to do the same, then you may see some rally coming in the second half of this year. And that's what our feel is also, that if you're looking at the market moving up 8-9% in the whole year as such, normally it does 13-14%, you'll see the bulk of the rally coming only in the second half. And that all also will depend on, obviously, a healthy monsoons. If monsoons are normal, then that should help the rally. It should be going higher. But if there's El Nino, then probably the rally also will be constrained.
So earnings is not going to change the trajectory of the markets because you expect this consolidation to take place. So the biggest thesis for markets picking up in the second half of the year is that the Fed pauses after perhaps one more rate hike and then it pivots, right? That's the only driver for a pickup in market returns, according to you.
Yeah. So actually our feel is that if things go the way they are, probably from September onwards, you may start seeing a cut in interest rate cycles as such. And that should help the market, in fact, also to believe that things are now normalizing per se. But as of now, it doesn't look like it because, I mean, ironically, the study was done in the US itself that once a tornado passes a town, the survivors come out very euphoric. But once the storm has passed, you start assessing the damages, and that's when your things come down. I think that's where we are today. The storm has passed. We're fairly euphoric. Let's see how it goes going forward.
Good afternoon. Thanks so much for joining. And Dinshaw, we spoke early April, I think so. And post that, we got some pretty weak commentary, weak results coming in from the IT pack. It makes you all interested or not yet?
Not as yet, Nigel, because our feel is that, in fact, June quarter will be the real quarter when things will further weaken out for them. You saw the numbers, right? I mean, in fact, if I remember right, Infosys for the December numbers, they on 17 Jan, if I remember the date right, they had upped the guidance, and it was the 45 days after that when things really collapsed for them. So you can imagine that things have worsened going into the March numbers per se, and obviously nothing positive has come out after that also. So the triggers are not there in place. And obviously, this particular June quarter will be probably the worst for IT names. Also, going forward, I mean, you can see that in the markets, right? I mean, things are not looking that bright in the US. There's a recession around the corner, which is a given, and that's what the Fed also needs as such. So all these things will work not in favor of IT companies, or in fact, any dollar earner as such and rupee spender. So that's our call here. So it's better to stay away. And also the valuations haven't fallen in line. They're still, I mean, even if you consider, say, high single digits, which the market is considering today, I mean, if you look at the analyst numbers, the valuations are still some 10-15% away from pre-COVID levels. But our call is that these will come off. The growth guidance will come off. It will be in mid-single digits. And that's when you will see the valuations also, the premiums moving up because of the guidance is being cut. So that has to correct for us to get excited.
Dinshaw, hi, afternoon, Surabhi here. So I remember we were discussing this last time when you were here. We were talking about financials, and I remember you making the point that you would rather add incremental money to banks than non-banks. And since then, I mean, we've got absolutely blowout performance from ICICI Bank, for instance. I mean, Q4 really tells us what's happening over there, right? So spot on. So tell me, incrementally, I mean, are you shifting anything in the portfolio, adding fresh more to banks? I get, but for instance, Bajaj Finance has been an old holding for Helios. I'm not sure if you've already been paring down positions there or not. Bajaj Finance reports tomorrow, because let's face it, this sector, retail consumer financing, it's all set for some pretty big disruption ahead.
Totally wrong, Surabhi. We've never had Bajaj Finance in a very long time. In fact,
I don't know why I thought that you had it in the portfolio.
We have it on the short side, in the long short.
On the short side, okay. My bad. Interesting. Okay, then it all ties in. Now it makes a proper sense. So, same question, financials, given what we're seeing from these top leaders and lenders, how are you approaching this part of the portfolio? So
basically, Surabhi, in fact, our feel is that the call was what? The banks were getting earlier hammered because everybody assumed that the NIMs are gonna peak out. Obviously, the interest rates had gone up quite sharply, and the deposits were catching up with the interest rates. The deposit rates, rather, were catching up with the interest rates, and as a result, the cost of borrowings will move off for the banks, and as a result, the NIMs would peak, right? Net interest margins, that is. Now, our call was that maybe they will, but the fact was that the growth in credit is the one which is going to push the earnings going forward. And that's a very big positive for the banks, because they are not only working on this technical aspect of the NIMs expanding, but also growth kicking in as such. And that is a big positive for re-rating of banks. And that's why we believed that this is a matter of time before the banks start reporting these huge credit growth numbers. And obviously, when the economy is picking up, it's a matter of time before that. And by the way, the base also was helping out here. So that's the thing here. In case of NBFCs, we're not that gung-ho, because if your NIMs are getting stretched there's a matter of time before the asset quality starts getting questioned as such. And that's why we're away from most of the NBFCs. We got a couple of them in our portfolio, but that also has to do with the only CV funding and stuff, and housing mortgage and stuff like that. So that's where we are.
All right, Dinshaw, very quickly, you want to share with us some more ideas you have on the short side? Normally, because the buy calls, it's a little difficult to get out. But if you could share a couple of those on the short side.
All high valuation names like the paints companies, they are a short in our portfolio. A couple of steel names are a short in our portfolio and stuff like that. But apart from that, I won't share too much.
Okay, all right, Dinshaw. Thanks so much for giving us some color on what you could. We look forward to having a chat with you rather soon. But let's spice things up then. You know, the markets have come off a little bit from the top. Pull up the Nifty Financial Services Index. It's playing out expiry, so you have got the 3 p.m. move, and that's on the downside. It's corrected close to 130 points in the last few minutes. I think that's the index that should come up for you on the screen, and that's what's causing the Nifty as well to move a little bit lower. But as I said, time to spice things up. D Street Chatters with us. Nimesh joins us. Nimesh, what are you picking up in terms of flows? How are things looking?
Well, Nigel, it looks like day of consolidation with a positive bias, but I guess the heavy lifting in the last 1 hour of trade has been done by Reliance, and that's helping the Nifty to some extent. But again, in terms of flows, it's a mixed day. But interestingly, for the first time in many days, there are a lot of offers being indicated, which means that at higher levels, FIs are willing to sell. You know, that's the indication which I'm getting from the dealing room. So that's something to keep a note on. I guess while the Nifty and the Bank Nifty are range bound, there is a lot of action in the broader markets. A lot of broader market stocks are doing well, and that's been the trend for the last many days, and that's the trend today as well. And that looks like that's where some bit of momentum is back. HNI action is back, and there is now good volumes as well in the broader market. So that's the overall feedback. I guess within the financials, while they've been performing well, but for the last couple of days, the shift has moved towards the PSU banks and the smaller bank stocks. That's where the money seems to be chasing. within the financials. But broadly, a bit of consolidation. But I guess at these levels, as I said earlier, there are a lot of offers been indicated, which means there is a selling shareholder at higher levels.
All right. What about individual stock, Nimesh? What are you picking up?
So in terms of individual names, the first is the two Murugappa Group stocks, which is CG Power and Tube Investments. Both the stocks have moved up from days low. There were a couple of blocks as well. I believe there was a clean out trade from a leading FI in both these companies. But beyond that, I guess for CG Power, the street is anticipating some sort of a corporate development as well. So that's something to track as far as the two Murugappa Group stocks are concerned. The second stock is Exide. Now, this is one stock after a long time has come into my radar. The stock is up 6% this week, and on good volumes, it's buzzing in trade. And the indication is that one of our leading domestic mutual fund has turned active buyer, and hence that stock is seen some bit of buying traction in the last many days. The third stock is Precol. I've been tracking this company for a while now. Again, the stock is at 52-week high and on good volumes, and there is an indication that maybe the next move from Minda Corp, which has bought 15%, could come very soon. So that's something to track as far as Precol is concerned. And the last stock is RVNL. For the second day running huge volumes in this particular stock, and for a change, even at FI desk, there are strong buy flows. So at these levels, there is some bit of traction in RVNL. In fact, there were multiple blocks as well in today's trade. So looks like that FI holder has bought more into RVNL, and hence a big move in that stock as well.
All right. Thanks a lot for that, Nimesh. That's clearly the big mover. Now a 3-digit stock, RVNL, flying away. The train has taken off. Well, time to slip into a short break. You come back. Our technical experts will be back with us. Don't go anywhere.
What? You think I am slow? I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know? No? Oh.
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
चले मामा जी घर चले
चले चले चले सांस भी नहीं लेने दी यार।
साफ हवा एंजॉय करने के लिए अब कहीं और क्यों चले, घर पे ही रुके। वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद HEPA फिल्टर, ये जर्म्स और पोल्यूटेंट्स को फिल्टर करे और दे साफ ठंडी हवा 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
हमारी प्रार्थना होगी स्वीकार।
Zedlac Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Welcome back. Looks like 17,800 will have to wait, selling in a couple of the large private banks like HDFC Bank, Axis Bank, even Kotak. That coupled with some names like Lever and Infi being on the downside, that has ensured that the bulls have to sort of rein in their enthusiasm. That's what the screen seems to be suggesting right now. Mitesh Thakkar is here with us. Mitesh, always good speaking with you. So now what? Not quite a very decisive sort of a breakout, but how would you approach things and what are the trades?
So I think, I spoke about the fact that around 17,820, you might see some supply. I think it's just a matter of few more hours that the markets can be subdued after about a 300-point kind of rally. My sense that trade on the long side, and in case you get a dip closer to 17,690, buy that with a stop below 17,625. And on the stock side, I have two BTST call. Bajaj Finserv is something which is on the list. So BTST with the stop at 1335, look for targets of 1365 here. And the cash stock Minda Corp has just made a fresh high, so that's on the buy list as well. Keep the stop below levels of 266 here, look for targets of 280.
Okay, Mitesh, thank you very much for that. The next stock is ICICI Lombard, which had reported numbers earlier, early part of last week. My colleague Yash caught up with Bhargav Dasgupta, the Managing Director and Chief Financial Officer of the company, Chief Executive Officer, beg your pardon, of the company, started by asking his expectations on the growth that the company will be able to do in FY24. Listen in.
Dynamics of the industry is changing as we speak. There is a lot of regulatory changes that are being brought about, which really improves the ease of doing business, allows us to launch new products, which earlier would take a lot of time to get approval, and in a sense be a lot more agile and flexible in the products and businesses that you focus on.
Correct.
And that's a big advantage. And the only segment that we are still cautious is the motor segment. Particularly the private car segment, where we are finding that the combined ratio for the industry is roughly about 118. If you see the 9-month data, now 118 combined doesn't make it viable to write this business. While I say that, I'm beginning to see signs of people taking some sensible calls in terms of being more disciplined about pricing. We'll have to wait to see that happen. Apart from motor, if I look at our other lines of business, health is growing faster than the market, and we believe it will continue to do so. Our corporate lines, across board, we've gained market leadership in most lines of business. We've been gaining market share. It's a very profitable segment of business, and we will continue to do so. So on balance, coming back to your question on where we see the growth and the combined ratio, we think we will grow faster than the market. We believe the market growth this year should be between 15 to 20%.
Okay.
And our combined ratio, which was about 104 last year, what we've said told to the market is that over the next 2 years, we want to bring it to 102.
What is your expectation if a price increase on the TP side comes through? What it should come as in the form of numbers, which helps keep companies their head above the water?
So if you see over the years, we've seen typically the increases have been around 7 to 8%. The expectation is that maybe the roads are becoming a bit safer, so the frequency should drop gradually. We've not seen that this year, though. We've seen accident frequencies, accident aggregate numbers pretty high. But if I look at a trend line over last 7-8 years, frequencies have come down. So if you get a 7 to 10% increase, even though inflation may be higher, I think that would be adequate to hold on to the levels of loss ratio today.
Would that be adequate to make you change your strategy towards motor approach?
We would definitely look at certain pockets.
That's ICICI Lombard for you. By the way, markets have started slipping a bit. So some profit booking is coming through. The Nifty, remember, touched 17,800. And in the last half an hour or so, we've given up close to about 40 points from the top. The mid-cap index has dipped into the red. The Nifty Bank is where the bulk of the selling pressure has come. The Nifty Bank was outperforming, and now that too has slipped close to about 200 points from the day's high. So Nifty Bank also in the red. Very sharp cut, as you can see over there. Jay Bala of CashTheChaos.com is with us on the show. Jay, for the last 2 days, we were seeing an up move in the market. Would you have classified it as a counter trend rally? And are you seeing it weakening now? How would you predict the near term for the markets and the key indices, the Nifty and the Nifty Bank?
Yeah, thanks, Rima. The markets are very close to end of the move, or it's probably topped out just before the Infosys results date. So, I had spelled out the one possibility last week. So I'm going to spell out the other possibility now. There's a small possibility that the markets are going to make a marginal high above 17,863, somewhere between 17,850 to 18,000, and then make a very sharp turn lower. And this is the second possibility. But in both these cases, the rally that started from 16,828 end of March, it's still a counter trend rally. And we are very near to the end of the move. If the markets try to break below 17,550 on a closing basis, the markets has already topped, and the move down has probably already started.
Jay, hi, afternoon. Bank Nifty has been a little stronger. It's taken out this previous high as opposed to the Nifty, which is not. What's your view there?
Yeah, the banking index, had put out a resistance of 42,900 last week, and the markets have come very close to it, and then it's turning lower here. And watch the 10-year India 10-year yields too. If we have another close below 7.183, it's quite probable that we're going to have an exhaustion in the India 10-year yields, and the bond portfolio, which is yielding profits for the banks, that's going to start deteriorating. So, the supports for the banking index, if it were to close below 41,700 from here, the bounce for the banking index is done. The strength is actually coming from PSU banks and, stocks like Bank of Maharashtra. It could still continue to make 52-week highs, but the strength which is drawing, the banking index is drawing from SBI, that might start to crack. So, there are pockets that might still show strength, but the main heavies could drag the market.
Okay, that's the view on banks. Jay, hi. Even while the indices have been locked in a very tight range, the broader market, at least in the month of April, has done pretty well. Look at, I don't know if you had a chance to check the moves on a couple of these railway-related stocks, like an RVNL or an IRCON, some of the wagon manufacturers. They've just shot through the roof, and consistently so in the last couple of weeks. So do they make the cut for you? Anything else on the upside at all in the Indian market?
The railway stocks definitely do have little more upsides, but all of them still remain to be short-term, trading moves rather than significant, buy and hold positions. Both these railway stocks names that you mentioned, they still have one more down and up, zigzag to be done, down up zigzag to be done. So they still have further 52-week high spending, but I won't treat it as a move that's going to be lasting. When it comes to other names, capital goods could have little more upsides to work with. The BSE Capital Goods Index got something like 36.5K price objective to be done. But again, once again, there it's all short-term move. As long as Larsen stays above 2080, we can still consider the capital goods sector to be trending up, but they haven't got much upsides. So it's just for extreme short-term traders. Again, IT, there is a high-risk trades in a couple of names. Not for me, because I believe the Nasdaq is very close to cracking. But if you have that kind of high risk taking capacity, you might want to look at Wipro with the low, and Infosys day low as a stop, and even Emphasis BFL with 1660 as a stop. But in my opinion, this is a highly risky move. But it's left to individuals.
All right, Jay, so Wipro and Emphasis, it's a high-risk trade, but that could be providing an opportunity. That's the caveat in there. Just coming to you, Jay, just for a minute, I want to focus on the Nifty Financial Services. There's clearly an expiry factor that's playing out, because you pull up the Nifty, that's moved closer around 35, 40 points lower, and the Nifty Financial Services Index, well, that's corrected closer around 150 points. The Nifty Bank, by the way, has moved into the red because of the larger, banks that have moved lower as well. So just keep an eye out on that. But Jay, from an emerging market perspective, the dollar index is very important. Actually, that's going according to our favor. We woke up this morning, we were closer to around 101.3. What's the view out there? Are we breaking down? Are we going to go below 100? Well, that will be a positive indicator for emerging markets, and India stands to benefit as well.
Yeah, the dollar index is in its last leg of its corrective move that started from 114.57. And, it can either make a marginal low below 100.7 or have a close below that and clock 99. But this is the last leg of the move, in my opinion. If the dollar index were to take out 103.36 without breaking a new low, I think the dollar index has already bottomed. But I would prefer it to see one last low below 100.7. So that's the, working thesis for the dollar index at the moment.
Jay, do stay on. Need to slip into a very short break. When we come back, we'll continue our conversation, and it'll also be time for market closing.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
कमाल की कार है ना
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100। इंडियन ऑयल, पहले इंडियन फिर ऑयल।
अभी तक मटेरियल आए नहीं? पैसे नहीं है। अच्छा।
UPRO Cap or 5600 on the metals index, or those levels on the two stocks that you mentioned. Jay, good to have you with us here. Thank you very much for your time. Appreciate it, and hope to speak with you again. So Jay's broad view is that we are done with this move. Broadly, we're already done, or maybe there's a bit more, but that's about it on the for the market right now. This up move basically. 21 points on the Nifty. So as we've been saying, the markets pulled back. By the way, the pullback on the reversal rather on the banks is even sharper. The high on the bank Nifty is 42,865, and we'll end at about actually far off that level. The mid cap index is flat. The small cap index did a little better though. I think the 15 minutes back you had a 0.5% gain. I think it's still there. The 0.5% gain on the small cap index. Market breadth also almost converged. 1,200 stocks higher and 1,000 plus stocks lower. So just a difference of 200 stocks. It was comfortably 2:1 till about mid-afternoon or so. So across the board, a little bit of deterioration is what we have seen. Large caps, Bajaj Twins did well. Bajaj Finance, Bajaj Finserv. The Adani Group stocks, Adani Enterprises in the Nifty, and Britannia and IndusInd were the other large cap Nifty names which did quite well. Prima.
Well, on the losing side, HDFC Group stocks. So HDFC Life, HDFC Bank, HDFC Limited. All three of them were down in trade, and this is after yesterday's outperformance. Profits were being taken off. UPL was another drag in trade. UPL ending lower with a cut of 2% after its global competitor Adamo reported a weak set of numbers. Revenues down 11%, EBITDA was down 18%, and it had a rub-off impact on UPL. IT names, Tech Mahindra and Wipro in the large cap space ended with cuts of a little less than 1%. But ITC and Bajaj Auto deserve mention because Bajaj Auto, of course, we're awaiting the numbers, should come out by 4:35. But both ITC and Bajaj Auto ended at 52-week highs, or at least hit them early in trade.
Well, folks, the one good aspect of trade today has been the fact that the advance decline ratio has been positive throughout. Even with the Nifty finally cooling off to end the session, you still have over 1,500 stocks advancing, just about 1,300 on the declining side, and some massive movers. Look at RVNL, 20% circuit, that's how it's going home. Tex Rail can be added to the railways list, up about 7% as well. You have stocks like HOEC up 5%. I didn't mention, by the way, IRFC on the railways pack, 5% on that stock as well. Some of the other PSUs like SJVN, small stock, 34 rupees stock, but up about 5%. Zomato was the other one, 3.5% on the upside. PNB Housing, Marico, 3 to 4% on these stocks. So all was not lost, and you had some pretty smart movers and shakers. But yes, on the flip side, Mastech cooled off after its mega run post the earnings. Paytm was down about 2.5%. Some profit taking on a Nykaa, on a Lemon Tree. And of course, IPCA kind of takes the cake in terms of the major newsmaker. Crompton and IPCA, the big headline grabbers from the mid-cap arena for the obvious reasons. So that's the market. Very flat close, 17,763. So the bulls not quite able to make the headway towards the 17,800 level.
Well, with that, it's a wrap on Closing Bell. Thank you for watching. Don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.